Well, our next guest, Charles Biderman, is the CEO of TrimTabs's Investment Research. It's an independent investment research firm, and a new report from the company says the U.S. economy shed 65,000 jobs in August based on an analysis of daily income tax deposits to the U.S. Treasury. Charles Biderman joins us now. So 65,000, the economist estimates right now are for down 100,000 in non-farm and up 42,000 in private. So net, it's not going to be a pretty report, Charles.
Well, the economy is slipping. There's no question about it. Income tax collections adjusted for the various make work programs or COBRA. The growth rate of wages and salaries is declining from the prior few months, so the economy is slipping. It's not a good sign. There's been massive outflows from equity funds, about 17 billion in the last month, and there's been outflows every week since the May trading debacle day, whatever.
The flash crash.
The flash crash. Sorry, my mind.
That's okay.
And hedge funds are seeing consistent outflows. It's not a pretty picture out there. You know, the only thing that's getting money is bond funds, but what people don't realize is that since March a year ago, 700 billion has gone into bond funds. However, 700 billion has come out of retail money market funds and CDs as they run off. Rather than put money into the bank or in a money market at nothing, they're buying bond funds. It's not new inflow, if that makes any sense.
Let me ask you to focus on the jobs picture for a second here. You think that we're going to add 70,000 jobs in the private sector. The reason we'll see the drop of 65 is because of the Census Bureau reductions. What can the federal government, or what can the Fed do to help us reduce unemployment, to help the labor picture look better?
There's only one thing that it can do, and that's cut withholding taxes. We collect $1.5 trillion in withholding every year. If 150 billion was reduced, or 10%, or people got 10% more take-home pay, those with jobs, that would be the only thing I can think of that would perk up this economy. Giving 700 billion to the banks to bail out the banks and to bail out Wall Street doesn't create jobs. Giving money to the people who make money so they have money to spend, more money to spend, a 10% increase in take-home pay will certainly generate increased retail sales activity out there. You know, helping the banks is good for the banks.
You know, Charles, we're talking a lot about today's rally, and this is something I mentioned earlier. I mean, your point is that today's rally, I mean, nothing special here. You're saying it's likely due to fund inflows, correct?
Well, beginning of every month, money goes, you know, there's some people who put money into the market at the beginning of the month. Whenever I talk to individual investors, I say, choose the last week of the month, you know, a few days before the end of the month. Prices tend to go down. Why do you want to put money in the first day of the month when prices are going to go up?
Where do you expect us to see the 10-year sort of medium to longer term here? I mean, what do you think we're going to see as far as the 10-year yield in 6 months or a year?
Pretty simple. Flow follows performance. Since '83, the 10-year has been going up in price. Don't even talk about yield, just talk about price. So if it's going up in price and you're a big guy and you can borrow at 10 basis points on a repo and you could buy a 10-year at 2.5 and the price keeps going up, you know, it's an easy trade as long as we're in a deflationary trend and the economy is slowing. It's very popular among the hedge funds and the big traders.
How long does it continue to be a popular trade in your view?
Well, as long as the economy is doing poorly, it's going to be a good trade until the black swan day when it busts. You know, it's based upon the fact that foreigners that are willing to buy the excess hundreds of billions of dollars that the U.S. can't print, that has to sell to foreigners. When they stop buying at some point, assuming that we keep printing this much, it's going to be a black swan day, and the 10-year Treasury is going to collapse in price.
So, Charles, just got 30 seconds. So add it all up. I mean, in terms of the outlook, based on the flows that you track over the outlook for the next 3 to 6 months, just sum it up for us, and just quickly, if you could.
Well, incomes are declining, and if incomes are declining, money available for investment is going to decline.
So
and if money available, that's not good.
All right. We're going to leave it there. Charles, thank you so much. Charles Biderman, CEO of TrimTabs, joining Matt and myself.